Good morning, everybody. It is Scott here with Parks Properties, and today we're just going to go over a new calculator that we just added to our website. It's going to really help investors in pre-qualifying particular properties they're interested in and seeing if it meets their investment strategies and goals. So first, we're just going to start off going to parks-properties.com. And then you can go to Investing and Investment ROI Calculator. Now this calculator is going to allow you to input several different fields, and then it's going to automatically, dynamically put out the responses to the inputs. So for this example, we're just going to use a house for $225,000 purchase price. And most investments you can get put down about 25%, so we'll put 25. And as you see, the loan amount automatically calculates it as 75% loan to value. And interest rate, you can go ahead and put whatever your lender is putting for an interest rate. If you don't know exactly what interest rate investment properties carry for single-family developments, you could typically do look over here where it says mortgage rates and 30-year fixes, and do about a half to 3/4 add if you have great credit and income. Otherwise, you might want to add about 1 to 1.25%. So for this example, we'll just assume that the person purchasing or wants to qualify the property has great credit and income. So we'll go ahead and make it at 4.25%. Typical tax ratio we use is about 1 to 1.25% of the value. For the example, we'll leave the default at 1.2. Now we do management for properties, and typical management fees roughly between 7 to 10%. However, if you do purchase a property through Parks Properties, we will manage it for a 50% discount for the first year, and then we have going forward additional discounts if you have multiple properties managed by us. So for this one, we'll just assume that you're going to purchase the property from us, and that the property management fee will be 3.5% of the rental income. For the insurance, it's a real easy calculation as well. It's typically 0.34% of the value of the property. Most properties in the $200,000 range will be about $60, $70, depending on the age, but something in the 90s plus to 2000 plus should be around that price. For this example, we'll use we'll say $1,995, and year over year for the appreciation average, we'll use 7% because this was our first year that we've had since last year about a 6%, little over 6% appreciation in Northern California. But this will definitely range for the area that you're looking to buy in. So you can talk to a local agent if it's not an area that we cover for that figure. Now, if we look at the results below, it'll tell you exactly what your down payment requirements are, which is at 25%. Of the $200,000, which equals to $56,250. It tells you what your loan amount would be, your payment at that 4.25% that we had up here, how much your interest only payment on that would be, your yearly mortgage amount, your yearly interest amount, what your property taxes would be at that 1.2%, what the monthly property management fee would be for us to manage it. The insurance amount is $63.75. You have a gross rental income of $19.95, an annual rental income of $23,940. Total expenses for the property, which includes your taxes, your management, your insurance, and your monthly mortgage payment, principal, and interest. Comes out to about $1,188.73. You minus that from the rental amount, shows a net operating income of $806.27. And if you calculate that from your investment amount, that's approximately 1.43% return on your money on a monthly recurring basis. Now, if you look at the yearly appreciation values and your yearly investment return, this is a great tool to see if you're looking to do a 1 year, 2 year, 3 year, or even up to a 5 year to see which one best meets your strategy goals. Now, if you were saying that you needed to do just a 1 year, your appreciation in that 1 year would be about $15,750, and add your monthly 12-month net operating income to that, brings about $25,425, which equates to about 45% of your investment amount. So as you see, just a single year, you're almost 50% back of what you put into the property after 1 year. And look at how that jumps in year 3 and year 5. And most investment properties are typically around that 3 to 5 year period before you'll either sell them and move up to another property, or if you want to hold it and continue to have that increase, you can. But as you can see, it's a really simple tool to go ahead and just look at all the different payment options. Now let's say you find out that you aren't going to be able to qualify for the 4 1/4. So let's just go ahead and change this to 5%. As you see, it automatically changed the figures for you dynamically. So now you can come back down here and say it only changed the yearly about 1%, and it didn't really affect the 1 year return on investment. So that's really good to know. Now, Melissa, maybe you're going to manage the property yourself. Go ahead and just put a 0 in this field. As you see now, the management fee is zeroed out to $0, and it brings you back up to 45% on your annual return on your money. So if you do have any other questions, I really appreciate any type of feedback, whether that's positive feedback, whether it's negative feedback. If there's a bug in the program, in the calculations, if you'd like to see maybe some more additional calculations for the future revisions of it, I would love to hear from you. Go ahead and just either give us a call at this 800-994-3510, or you can use our Contact Us page by clicking here, and it will bring you to our Contact Us page. Just fill this out with your comments, let us know what you think of it, and we'll get back to you. Well, I really hope you appreciated and learned a little bit today from this calculator, and we look forward to working with you in the future. Have a great day.